So this is a powerful concept on how RoyalQ works. I need you to understand this concept. If you understand it, you see the beauty of this amazing technology that can make money for you. Remember, I mean, RoyalQ, you are in control of your assets. Your assets are in your private exchange account. No one can scam you. It is one of the best businesses in the online space. I highly recommend you trade with RoyalQ. All right, so this is how the bot works, right? So we've got to buy signal, and we entered here. So this was our entry point. And if you look at our entry point, the trade went in our direction, right? This was about the trade went in our direction, yeah. Now it gave us good 3%, and our target was maybe 4%. So around 4 a.m., 5 a.m., the market started reversing. Now at this point, maybe you were asleep. The market started reversing, and by the time you knew what was happening, getting ready for your day, the market has gone against you. All right, this was your entry, and this is currently the market direction. Your entry is what it is, but there's a concept of average price. What's the concept of average price, and how does RoyalQ help keep you in the market? So remember, RoyalQ will buy here. When the market has gone down by a certain percentage, it will buy more of the asset here. You're not going to be bothered about the loss. It will just keep bringing down the average price by buying here. The market went against you further to this point. RoyalQ will buy here. The market went against you to this point. It will buy more here. And when the market went against you to this point, those trading futures would have been crying by now. But RoyalQ still bought more here. So what is RoyalQ doing by buying more? Let me give you an example with a calculation of a trader who is selling shoes. All right. So let's say you sell shoes, and a shoe costs $10. Let's use the term dollars this time. A shoe costs about $10, and you bought 10 of those shoes. Right? Or let's just say you bought 5 of those shoes. You are a businessman who deals on shoes, so you have 5 of those shoes, and you bought them at $10 each. So that means you have $50. 10 times $5 each, right? That's $50. 5 shoes you bought at $10 each. Just remember that example, $10 each for 5 shoes. Now, you close your business on weekend, hoping to resume on Monday. By the time you get to the business on Monday, you now realize that the shoes you bought, 5 of them at $10 each, suddenly the market is selling those shoes at $2.5. Now, if you try to sell yours at $10, let's just say the price dropped to $5, okay? You bought it at $10 and the price has dropped to $5. Now, if you try to sell yours at $10 or $11, nobody's going to buy from you. Everybody will want to go buy from people who are selling at $5 because somebody imported a lot of the shoes, and the shoes are now available. People are buying and selling, it's $5. But you just bought last week at $10. What are you going to do? You can't sell your shoes at $5. That will make you run loss in the business. Like real loss, 50% loss. You can't do that. So what are you going to do? As a smart businessman, the price has gone against you, just like in the chart, the price has gone against you. You now go to the market and you say, okay, since the shoe is $5 right now and I bought at 10, I bought 5 of it at 10, I want to buy 10 more shoes. I'll buy it at $5 each. So remember, you bought 5 shoes at $10 each. Now you want to buy 10 of those shoes at $5 each. So it's still 10 times 5, 50. So you spend another $50 buying 10 of those shoes. Okay? Initially, you spent $50 buying just 5 of those shoes. So now you spend another $50 buying 10 of those shoes. So that means you have 50 plus 50. That is $100 worth of shoes. Okay? Now, how many shoes do you have? You bought 5 initially, and now you bought 10. So that means you have 15 shoes. 15 pairs of shoes. Okay? So what's the average price of your shoe? Because you bought some at $10, and now you bought some at $5. So what is the average price of your shoes. The average price is simple. Your total you spent on buying the shoes, now 50 initially plus 50 now, that is $100, and you now have 15 shoes. So $100 divided by 15 shoes. Remember, you bought 5 initially and 10 later. So what's the average price? So the average price for your each shoe is now $6.6. So at $6.6, before the end of the day's business, the price for the shoes went up. And the price of the shoes went up to $7. The moment the price of the shoes got up to $7, you quickly started selling yours. You sold everything. That means you made some money. You made, let's just say it went up to $8. Let's just say it went up to $8, okay? As it went up to $8, what does that mean? You made $1.4 on each shoe. All right? Now, you didn't need the price to go back to $10, no, for you to be profitable. You just needed the price to get above $6.6. So even if you sold at $7, all right, or let's just say you sold at $7, you'd have made $0.6 per shoe, and that would have meant 0.6 multiplied by 15. You'd have made $9 selling off all 15 shoes, and the price just went to $7 for you to make this $9. So this is how RoyalQ works. RoyalQ doesn't bother about where the market goes. All it does is, the market is going against you, it keeps buying that product in larger quantities at a cheaper price. By so doing, when you divide all you've invested across, the quantity you've bought, your average price. So that's a powerful concept of average price. All right, your average price will drop. So look at this trade in question. Our entry was here. RoyalQ bought here. It bought more here. It bought more here. It bought more here. And when the market went deeper, all right, when the market went deeper to this point, it bought more here. So guess what? Where would your average price be? Now, when I examined the real trade on the RoyalQ app, the average price was right here. So the average price, just like the price of that set of pair of shoes, dropped from $10 each to $6.6 because you bought more. The market value, the market average price you entered here, it has now dropped to here. So the market does not need to recover to this point or higher for you to take profit. No, the market just needs to rise up just above this current point and you take your profit. And if it rises higher above this point, you can make a lot of money. So how can you determine what profit to take? So let's just say if you are, maybe in a hurry and you just want to take 1.something%, you just put, all right, I'm okay with 1.3. This is the major support level that we had. It's okay, give me 1.2, I'll walk away. So anytime the market hits this line, you're going to get 1.2% gains. But if the market does move beyond this line, your next profit target is somewhere here. Okay, so you can put it at 6, but you could just put it right here, 5%. So if the trade has gone against you, and let's say it has bought the dip with a lot of money and kept buying, let's say you have $1,500 in the trade after buying all the margin calls. So you'll be doing 5% profit multiplied by 1,500. $75. So this trade could come out within a period of a week or 10 days. Once it comes out, you have $75. People are going to be like, wow, how did you make so much money? That's the market. The market will buy the dip when the market goes against you, because trust me, no matter how smart you think you're trading, the market will always go against you. That's normal. Okay, so get ready. That's the concept of how RoyalQ works. When we talk about margin calls means it has dropped by so percentage. First margin call, buy this amount. All right, we have videos explaining those margin calls. We trade with 5 margin calls. All right, of course you can extend them to 7 or 10 margin calls, but 5 margin calls. So just remember, market has dropped again by a certain percentage. Second margin call, buy X amount. It has dropped again to this next Third margin call, buy X amount. It has dropped again to this level. Fourth margin call, buy X amount. It has dropped again to this level. Fifth margin call, buy X amount. So that's buying the margin calls, and buying the dip has brought down the average price from here to here. And you're going to see that this trade is going to sell out. But such trades do test your patience, because you start to imagine like, oh my God, trade is going against me. It's going against me. Oh, I'm feeling the pain in my back. The market is going against me. You just have to enjoy the market going against you. That is one of the tips if you want to trade with RoyalQ, because when the market goes against you, it begins to use all the money you have as USDT reserved to buy the assets and bring down the average price. Over time, you'll realize that the price will bounce back and you'll be able to quickly take profit. Remember, if you're in a panic mode, you might just want to take 1.2% and get out, because that's the next support or resistance level. And if the market, if you feel that there's some momentum and you have your eyes on it, you get a good 5% from this side. And trust me, the market, when it decides to pump, will pump and pump you back to this point. And guess what? 10%. So imagine if you have $1,500 and you hit 10% gains on that trade after waiting for 10 days, that is $150. Amazing income. That is how RoyalQ works. This concept, watch this video again and again. Remember to like and follow the channel, because we'll be dropping these tips. We want you to be an expert trader with RoyalQ. Remember, RoyalQ is a bot you can trade with for the rest of your life. I mean, for the rest of your life, you'll be in control of your funds. Trade with us.